to introduce the ESG management team. Mr. Ambrose Chan, CEO Asia. Mr. Yo Ek Chong, CFO Southeast Asia. And Ms. Justin Wang, Director of Strategic Business Development Asia. And today's agenda is, we'll start with opening remark by CEO Mr. Ambrose Chan, and then Group Financial Performance by CFO Mr. Yo Ek Chong, and Building for Growth by Ms. Justin Wang, Director of Strategic Business Development. Can we start with Mr. Ambrose?
Thank you, Nob. Good morning, everybody. I'm pleased to report DSG continue to its track record of outpacing industry growth in key markets in the financial year 2012. Despite the challenging external and competitive environment, both Baby Love and Pet Pet achieved record sales and market share in Thailand and Malaysia, respectively. BioCertainty continued to grow and maintain its market leadership position in Thailand, adult incontinence market. In 2012, sales and bottom line achieved a record. Sales revenue grew by 16.8%, whereas the operating income grew by 40.9%. After accounting for the insurance claim of 180 million baht recovered from the flood incurred in 2011, the adjusted net income growth was at 17.2%, which is in line with the top line. This year, I think we have a theme for building for growth. Looking at the past 5 years, our top line growth averaged about 25% since 2008, and earning per share up by about 100% over the last 5 years. I will turn to CFO to give some more detailed financial performance review.
Thank you, Ambrose. Following the business for growth, we have announced our 2012 financial performance, I think a couple of weeks ago. Revenue from sales, we grew by 16.9%, from 5.7 billion to 6.7 billion, as mentioned by our CEO just now, mainly driven by Baby Love growth and as well as Pet Pet in Malaysia. We actually record a market share gain as well as record sales over the last years. So overall, we actually beat the market growth as well for those two countries, and we achieved 16.9% growth. On the operating income from operation, we increased from 421 million baht to 593 million baht, or 40.9% growth. Adjusted the insurance claim, we actually grew by 15.2%. Last year, we have been affected by the flooding impact of close to about 198 million baht. Out of 198 million baht, 147 million baht due to the stock damage, and another about close to 50 million is due to the business interruptions expenses. Out of this 198 million, we managed to recover more than 90% from the insurers, and and last year we received 182 million from the insurers. So our reported income will grew by 217%, from 200 million to 640 million in 2012. Our cash position also improved significantly, which I will show it in a couple of slides later about the cash from operation. But if you look at our cash cycle, we are maintaining our cash cycle at about 68 days. There are no significant change from 2011. We improved our interest coverage from 8.4 times to 14.2. And in fact, the gearing is also manageable at about one times. No significant change compared to 2011, despite we have investment in Malaysia, which is partially funded by the external borrowing. On the net debt to equity, also quite stable at about 1.6 times. Yeah, as mentioned by Ambrose just now, we in terms of the revenue, total revenue, we actually recorded CAGR of over 25% for the last 3 to 5 years. We started off 2008 with about 2.9 billion baht, and gradually we moved up to 6.7 billion, which is almost double the business in the last 3 years. In terms of the adjusted net profit, we adjusted the flooding impact. So basically, if you look at it, we also actually double the net income after tax from 2008 at 227 to 469 million. As I mentioned before that, the flood insurance claim amounting to 182 million. And in terms of the net margin, we maintain 6.9% ROS at a similar level to 2011. And if you look at in 2008, 2009, it's quite high. For the last 3 years, we see the raw material price increase significantly. Yeah? But in terms of the gross margin or return on sales, we actually have slight decline, but we are maintaining at a very reasonable and reasonable level compared to our other competitors at this point of time. Because I think if you follow our company in the last couple of opportunity days, you will see that one of our key strategies is to maintain operational efficiency. So this is where something that we have been working on continuously to improve our operational efficiency so that we can maintain certain level of cost improvement to mitigate any of the raw materials price or foreign exchange exposure that is out of our control. Yeah. Earning per share also grew almost 100% from 0.25 baht to 0.71 baht. And if we take out the flooding impact, it's 0.52. On the financial position, we have our asset have grew by close to 3 times, but our liability also net liability is about 4.7 times, and in net the equity grow about 2 times since 2008. Revenue by segment in 2011, 61% of our revenue come from the baby tape, and 2012, 58%. And on the baby pants, 2011 is 22, and in 2012 is 26. If you see this from this chart, you basically will see that there is a shift of the revenue from baby tape to baby pants category, which is currently what the market is moving towards baby pants category, as well as similar to our strategy as well, where we are moving towards more on baby pants compared to baby tapes. And adult diapers is maintaining about 16 to 17% of the total group revenue. On the by country, the group is similar to 2011, 2012 we also supported by 2 of our main core country, which is Thailand and Malaysia at this point. We have some entry into Indonesia market, and Singapore is still relatively small on the group basis. We believe this revenue by country will not significant change in the coming years, even though Indonesia will give us will contribute at a higher level. But overall, I think Malaysia and Thailand will still be the main anchor country for DSG Group. Under cash flow, last year we have 2012